Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
This week's edition of Crypto Trader starts right now, and as the crypto markets are on a bit of a run, we're going to be looking at the Jamie Dimon coin. Is it a real thing? And if it is, what does it mean for the crypto market? And has Jamie Dimon done an about turn? Then, is Dr. Craig Wright really willing to testify that he's Satoshi Nakamoto? Later on tonight, we cross over to London and speak to the man who's willing to take the stand. We visit the Cayman Islands for the biggest alternative investment summit in the world. We get a real feel for how the traditional fund managers are viewing our asset class. We speak to Frank Chaparro from the Block Crypto, who claims that there is action happening on the crypto markets, but it's not happening on the traditional exchanges. Andy Singleton tells us why he published an article titled "The Real STO Market Outlook Near Death." And then Anthony Pompliano will tell us what news he's looking for today. All this and more tonight on the world's only televised cryptocurrency show, so stay tuned. The biggest story of the week must be the announcement that JP Morgan, the bank that's headed up by Jamie Dimon, the same Jamie Dimon that lashed out against Bitcoin and crypto just a year ago, is launching a digital blockchain asset, a crypto, to help them move the $6 trillion a day that they move around the world. The coin, which will be backed by US dollars, will remain pegged to the US dollars and will be redeemable for US dollars. The announcement sent the crypto community into a spin, with everyone having their say, most insinuating that the coin is a fraud, a mechanism for sophisticated money laundering, and of course that Jamie Dimon had done an about turn on his view on crypto. Let's take a look at some of the comments from Twitter. Mike Dudas tweeted, JP Morgan, the bank whose CEO Jamie Dimon has called Bitcoin a scam and said I really don't give a shit about Bitcoin, is launching its own cryptocurrency. When the block inquired a month ago, JP Morgan blockchain execs denied that this was in the works. Zero Head says, Dear JP Morgan, which asset will Jamie Dimon call a fraud next so we can buy it? Anthony Pompliano says, from 1834 to 1971, someone could redeem their gold for dollar bills. Today, JP Morgan claims you can redeem $1 for every JP Morgan coin. Eventually, the banks will get greedy and not allow redemptions too. It's just a matter of time. And then, of course, Brad Garlinghouse jumped into the mix and started tweeting. As predicted, banks are changing their tune on crypto. But this JPM project misses the point. Introducing a closed network today is like launching AOL after Netscape's IPO. 2 years later, and banks still aren't the answer. He, of course, promoted XRP as the only independent digital asset which could provide banks with efficient settlements due to its global reach. Then there was Nuriel, and I couldn't see his tweet because, just like everyone else in crypto, I'm blocked from viewing his account. But apparently he also jumped into the fray by tweeting, in which way has the new alleged JP Morgan crypto coin anything to do with blockchain or crypto? It is private, not public, permissioned, not permissionless, based on trusted authorities verifying transactions, not trustless, centralized, not decentralized. Calling it crypto is a joke. And just to make sure that his message was loud and clear, he followed up with another tweet reading, ditto for XRP, it's as much of a joke as the new JP Morgan new pseudo crypto coin. But did Jamie Dimon actually do an about turn on his stance on crypto? Let's take a listen to what he said just a year ago.
I could care less about Bitcoin. I don't know why I said anything about it. The blockchain is a technology, which is a good technology. We actually use it. It will be used for a lot of different things. God bless the blockchain. Cryptocurrencies and digital currencies, I think are also fine. JP Morgan moves $6 trillion around the world every day. We don't do it in cash. It's done digitally. Yeah. If it can be done digitally with the blockchain, so be it. But it'll still be a dollar cryptocurrency. What I have an issue with is a non-fiat cryptocurrency. Dollar, so crypto, sterling, euro, yen, they're all fine. I don't personally understand the value of something that has no actual value. You all can do whatever you want, and I don't care. Okay? I could care less what Bitcoin trades for, how it trades, why it trades, who trades it. If you're stupid enough to buy it, you'll pay the price for it one day.
So it sounds to me like Jamie Dimon hasn't done an about turn, and he's actually just delivering on what he said exactly a year ago. Mark Yusko, This Jamie Dimon coin, is it a real thing?
Look, the Jamie coin, I just tweeted about this. Stop calling it a cryptocurrency. It's not a cryptocurrency. It's a digital asset created in a walled garden by the elites, backed by the fiat dollar, which is the thing we're trying to escape from. And it's designed to try to preserve the incumbency that these guys have. And look, I don't begrudge them trying to save their franchise, but it's not a cryptocurrency. It's not decentralized, and don't call it crypto. So the Jamie coin is exactly what you expect it to be. He wants people to think it's the Bitcoin killer or the Ripple killer. It actually might be the Ripple killer, but it's not a crypto.
Earlier this month, I was invited to attend one of the biggest alternative investment summits in the world. CASE is an alternative investment summit that is held annually in the Grand Cayman Islands, and it's a place where traditional hedge fund managers go and look for new and excitement investment ideas. Amongst the investment topics this year were AI, responsible investing, and then of course blockchain and crypto. For me, it was also an opportunity to step out of the bubble and to go and find out what the traditional hedge fund world thinks of our asset class. It was also a great honor to be moderating the keynote blockchain panel with some of the big names in the space, including Scott Cooper from Andreessen Horowitz, Mark Yusko from Morgan Creek, Travis Kling from Ikigai, and of course Tom Series from Animal Ventures. Let's take a look at some of the highlights from CASE 2019. I started off by asking the panel to give us some insight into the investment thesis in the space, and especially the investment thesis of Andreessen Horowitz. Let's take a listen to what Scott Cooper had to say. Scott?
Right. My name is Scott Cooper. I'm the managing partner of Andreessen Horowitz. We are a multi-stage venture capital firm based on the West Coast. We manage about $7 billion across three principal areas of investing. One is traditional consumer and enterprise companies. Secondly is the intersection of life sciences and computer sciences. And then third is in the crypto space. We've been investing in crypto since about 2012 when we first invested in Coinbase, which is one of the leading exchanges that you may have heard about in the space. Similar to kind of how Mark described, we are interested in what I would consider kind of the non-liquid side of this market, which is mostly in infrastructure and assets that look like to us like venture capital companies. So, entrepreneurs who have ideas about things they want to build in the infrastructure space. Many times the products don't exist, and a lot of what we're investing in is the promise that they will do that. And that's how we think about the business more generally. So we are buyers. We have not sold any assets, and we think of all these as traditional venture investments, which is they may have 7, 10, plus year hold horizons.
It was then time to get the elephant out the room. I mean, here was a panel of 4 crypto experts representing an asset class that had declined 80% since the same conference last year. I asked them why they're still so excited in this space. Take a listen.
Look, what makes us excited about this, and look, there's no doubt that obviously price fluctuations matter a lot in these investing markets, and Bettina kind of touched on it a little bit, is to us what this is all about is what it will be one of, either the or one of a few kind of next compute platforms going forward. So, and the analogy to us that's most exciting about this is exactly how kind of the internet developed in its first incarnation. So, she had a slide up there, and if you think about all the internet protocols that have created a tremendous amount of wealth in the business. So for anyone who uses email, that's based on a protocol called SMTP. That was a protocol that was developed by academics, managed by foundations, and is the basis of which Google and Microsoft and others have obviously built tremendous businesses. That's true of HTTP, if you know all these acronyms, of TCP/IP. All of these protocols were essentially open protocols, which means they were available to anybody who wanted to use them. The rules of the road were quite well known and often either managed by academic or foundational communities. And the second analogy to think about in the compute world is open source software technology, which actually began in the 1980s at MIT and was regarded at the time as this very radical left fringe thing, this whole idea that we should actually give software away for free and that we should open up the development process. If you fast forward to today, open source in the form of Linux, quite frankly, is the dominant operating system. And what we see today, the potential for blockchain-related technologies is very similar to those two instances in history, which is the idea that you can have open development, open protocols that are managed by a community as opposed to managed by a central organization. And with the massive innovation that blockchain brings, which is the use of a token that provides not only a financial incentive to the people who are participants in that market, but also provides a mechanism for governance in a way that didn't exist in these other areas. So that to us is why we're excited about it, is if you talk to developers in the kind of engineering community, the idea that they could build applications on an open protocol very similar to how very large companies built businesses on the open protocols of open source and the internet, that's what gets us excited.
After that, it was Travis Killing from Ikigai who jumped in with his view.
Bitcoin has been doing more or less the exact same thing since it was launched a decade ago. It's actually really simple. Every 7 minutes or so, it generates a block, and it puts that block on the end of a chain of a bunch of other blocks, and then it starts with another one. And all of the price fluctuations that we're seeing is the world trying to understand what this thing is. The thing just keeps doing what it does, and that's part of the beauty of it. You were down 85% from the peak in December of 17. That's the fifth decline of over 40% since the price of Bitcoin started trading. Obviously, every time since then, you reached a new all-time high. Those fluctuations, this isn't like, you're not selling widgets here. This isn't like, slanging insurance or something. You're talking about potentially forming a new form of money. That doesn't happen, once every decade or once every generation. That's like a once in every couple hundred or couple thousand years. We've been using gold to store value for 5,000 years. And there's a really good chance that we may have something better than gold now to store value. And to think that the world's just going to immediately sort of be able to swallow that and then perfectly value what that is, that's just being a little bit naive.
I then wanted to dig in a little deeper and maybe stir the pot a little bit. And boy, did I get more than I was bargaining for.
So Bitcoin, store of value or transaction platform?
Archaic. Right? Let's talk about Bitcoin for a second. The reality is that it's an archaic piece of technology. It's not, a general compute platform, really. Can't really build applications on top of it. It's limited in that kind of functionality, right? Ethereum was the first evolution of the virtual machine, right? That is a compute platform in a way, right? It still uses things like proof of work, right? So does a Bitcoin network, which is a complete waste of time, energy, and money, basically. So, at the end of the day, maybe it will be a gold, maybe it won't. The reality is basically what Scott said, right? These are generalized compute platforms. They're computers, right? And just like any computer, you can build applications on top of them. There's services, there's middleware. Some of them are baked into it, right? The modern day blockchains that you should be paying attention are venture oriented. You're going to get a SAF deal. You're going to get tokens with that equity. Don't go speculate in the markets because it's going to be a complete loss. They're fundamentally manipulated at the end of the day, right? Let's be realistic, right? Go make traditional good investments, right? If you were sitting back and, Steve Jobs pitches you, OS X, right, or, the Apple operating system, and you're Don Valentine sitting there saying, great, well, okay, there's a whole stack here. I'm going to make investments here in the operating system, but I'm also going to go invest in storage, and I'm going to invest in cloud, I'm going to invest in all these other things that kind of go up and around the stack. That's what you really should be paying attention to. And we've only made a handful of investments in the space. One company called Picks and Shovels, which is building institutional asset management kind of stuff with Matt Galligan over there. Definity is an investment of ours. Polkadot, which is betting on the internet of blockchains versus the dominant blockchain. And or in Ethereum, which was a great investment right out of the gate.
Okay, now I had the momentum and things were really starting to get interesting, especially because of the 4 panelists that were representing crypto, not even one was excited by the 2,000 coins that were listed on CoinMarketCap. Not even one. Take a listen to this.
We've got 2,000 or so listed cryptocurrencies at the moment. And yet most of you are talking about illiquid equity investments. Does that mean that the 2,000 or so listed tokens today on CoinMarketCap, does that mean that all of you here are discounting those as worthless?
Trash.
So we've done a full qualitative review.
Sorry.
So we've done a full qualitative review of the top 175 cryptos by market cap, and then another of the 40 largest private projects that haven't started traded their public token yet, like Definity, for example. And we have that divided into 5 sectors and 21 subsectors, which, if you know how portfolio managers at Point 72 run their business, actually looks a lot like the way you would trade a sector at Point 72. And money is one use case for distributed ledger technology. There are many different use cases for distributed ledger technology. Within money, you can think about store of value separately than you can think about a method of exchange. And then that is very different than thinking about sort of distributed compute or distributed storage or prediction markets or exchange tokens or interoperability, or there's lots of different use cases for this. And
which is usually a function of the protocol, though, right? So you're going to build on top of Bitcoin Bitcoin network, right? Right, Bitcoin is an application on the Bitcoin network.
Yeah, I would, if I could,
Yeah.
I would broaden it out a little bit. So
Yeah.
to answer your question, and we wrote a piece on this. I think as an institutional investor, you have to think about liquid and non-liquid markets, right? It's no different than how you think about asset allocation generally as a institutional investor, right? You have public equities, and you have alternatives, and you have private equities, and I think this is where people are confused on the institutional basis by the fact that liquid markets exist, and they forget that you want to actually understand what's happening on the illiquid markets too. It's a little bit like, look, if you were doing kind of venture capital and looking at AI, in the 2010, 2012 timeframe, you probably should have taken a long position in NVIDIA stock, right? Because it was clear, if you understood what was happening on that side, that there were also public market players. If you were investing in iPhone apps in 08, 09, you probably should have also taken a long position in Apple, right, as a result. And so this is not to give investment advice at all, but I think if you're going to understand these markets, you have to understand the intersection between kind of the liquid markets and what's happening on the illiquid side, because how those liquid markets trade is partly a function of how people will build on top of what the current infrastructure is.
I think it's a nomenclature problem too.
Yeah.
And you said there's 2,000 cryptocurrencies, and I'll argue there aren't. There are only about 16, 17 cryptocurrencies, and I use that term with meaning, meaning
right.
Cryptocurrency, either a medium of exchange or a store of value. All those other things are listed utility tokens. A utility token is a very different beast. It's not good or bad in and of itself. Yeah. It's just a token that gives you access to a network or a privilege or some use of a protocol. And the problem is, what you're talking about is pre-seed and seed stage projects, which have a 90% failure rate. So why anyone thought that this new form of venture capital was going to be different than the old form of venture capital,
Yep.
I don't understand. So 90% of those ICOs will go to zero, but that's no different than 90% of pre-seed stage venture deals going to zero. That doesn't make it a bad business.
The only difference is, generally when you invest in some kind of ICO through your equity ownership, you have some kind of say or some kind of vote in what happens in the company. On these derivatives, on these derivatives of an Ethereum token. Yeah. So you spoke about the fact that
speed of money, right? The speed of the liquidity is fast, right?
Yeah. Okay, so once we had that out of the way, I'll ask the panelists what they thought of the current scaling issues, and in particular, whether Ethereum would ever be able to scale.
If we're right about the thesis, this will look like every other technology market, which is the first innovations. They look silly, right? And they never work. It's always the case in technology markets. The first iteration of these products always look worse than the existing ones, right? So there's a great quote from Steve Jobs when he first introduced the iPhone. I forget who the executive is. He showed it to an executive, and he was trying to type with it, and he said, look, this doesn't work. Like the keyboard doesn't work. It's too hard for me to to do with my thumbs. And the famous quote from Steve Jobs is, your thumbs will get used to it. Right? And this is true, though, of every technology industry. So you're right. There's scalability issues. People are building solutions today to try to address that. You know, databases when they were first introduced, personal computers when they were first introduced, obviously had all kinds of issues. So if you believe the trends in technology, the investment opportunities will be the people who actually solve those infrastructure problems and ultimately make the mainstream technology.
Well, but think of things we take for granted today, right? Everybody loves Netflix, right? Netflix was a horrible business. Anyone remember the discs? Anyone an early subscriber? Okay, that company was on the verge of bankruptcy. They were done. They were completely done. But then this little thing called broadband came along, and suddenly this idea of streaming was possible. I mean, think about now watching HD in your hand. That's unbelievable. That was incomprehensible 10 years ago. Or Amazon. Quiz. How many times has Amazon had a double-digit drawdown in the 20 years that it's been public? The answer would be 20. How many times did it draw down more than 90%? That would be twice. Okay? So when was the good time to sell Amazon stock? Never. How many people bought it at the IPO and own it today? 3 people, Jeff and mom and dad. That's it. That's not true. I mean, there's a couple more, but there aren't that many. I mean, some of the guys you know, but not that many.
Yeah.
And on that note, I've got Mark Yusko with me on the line from New York City. Mark, you and I both had the honor of attending the Alternative Investment Summit in the Cayman Islands. And I think we both interacted with traditional fund managers. What was the feeling that you got from the traditional fund managers? Right now, as it stands, are they looking at crypto as a real investment class?
Look, they're definitely toe dipping today, right? They'll put a little tiny bit in, if they put any in at all. Look, every new idea, begins as broken precedent. And so precedent today says, oh, you can't do this crazy new stuff. But it's no different. When I got in this business in the early 90s, the idea that an institution would put their money in hedge funds, oh, it was so scary. And that's where all the bad people were. And there's these shady places like the Cayman Islands, and now we have big conferences there. So why is it that people fear things that are new? Well, all of us do. It's human nature. So what once was alternative, hedge funds, private equity, venture capital, derivatives. I mean, derivatives used to be very scary. Now everybody uses derivatives all the time.
Mark, one of the things that surprised me the most about our panel was that of the 4 crypto experts on the panel, none of you seemed in any way interested in investing in any of the listed crypto assets. In fact, all of you were investing in equity in the companies building the underlying infrastructure. Is this actually the case? And if it is, why is this the case?
Look, it's definitely the sentiment, particularly in the institutional world today. The idea of picks and shovels or infrastructure, venture capital, that is definitely embraced. And we've seen big fund launches, Andreessen Horowitz, Paradigm. We recently just closed our first fund in the venture capital space. So that's good. Now, we also have created something called the Digital Asset Index Fund, what we hope to become the S&P 500 of crypto over the long term. But there's been slower uptake because that's direct exposure into crypto. So people are comfortable saying, yeah, I understand venture capital. I understand infrastructure, this idea of helping build out all the things that need to be in place for crypto to have wider adoption. But there aren't that many. It's not zero, but there aren't that many yet that are really putting exposure into crypto itself.
Mark, you announced on the panel in the Cayman that you've just launched your new fund at Morgan Creek. You also went out in the press last week advertising that you've got some really high-profile investors. Tell us a little bit about the fund.
Yep. So the exciting thing is about 9 months ago, Morgan Creek Capital Management, which I started 15 years ago, launched an entity called Morgan Creek Digital Assets. So Morgan Creek Digital. And brought a team together, and many people know POMP and Jason joined me, and we're building out this digital asset business. So the first thing we did is we went out and started to raise a small fund to do venture capital, to do picks and shovels, to be involved in the infrastructure that will be necessary to build out crypto trading, security token trading, all the things that we think are going to be a big thing in the future. We're out to raise 25 million. We ended up with 40 million. But the most exciting thing about it, and the thing we got the most publicity about, is we actually got institutions to come in. Most of the money that's gone into venture capital around crypto and infrastructure has been from family offices, individuals. There have been a few institutions that went into things like Andreessen Horowitz or Paradigm, but we actually got the first pension funds to cross the chasm. So we got 2 public pension funds. We also had an endowment, a foundation, insurance company, and a healthcare provider. So we got 6 institutions to embrace this idea that this needs to be part of their portfolio going forward.
Now, Mark, I know you weren't the first people in the world to try and sell crypto or blockchain investments to pension funds. What was it that got you guys over the line?
You know, I think the biggest reason that they went with us and with Morgan Creek is that, you know, we've been around a long time and we have a long history of being early into new ideas. So back 15 years ago, when it wasn't popular to go into hedge funds, you know, we built hedge fund to funds. And when it wasn't popular to go into some of the new and emerging private classes, particularly something like private China, we raised an Asia fund. So we've always been that kind of trusted advisor in the alternative space. And so when we brought them this new idea, and we also spent a lot of time educating. You know, we met with the CIOs, we met with the board multiple times. We went and spent time answering their questions because they had real, legitimate questions. And I think that process of education, providing resources, but also being a trusted advisor that they could say, yes, we want to partner with Morgan Creek, someone we've known for a long time. And that helped them get over this, oh, this is too new and I don't want to be first.
So these investors that invested in the crypto fund, were they your existing clients that love you and trust you, or did you actually recruit new clients in this process?
Yeah, so really important question. So a couple of the institutions are clients we've had in the past, but 4 of the 6 are actually new clients of Morgan Creek. And so it was this great alignment of their interest in getting exposure to this new area, our good job of going out and telling people that we had this new opportunity, and then that coalescing of, hey, we trust Morgan Creek, we like these new guys, it's a good team, good idea, okay, let's do it.
Mark, you announced last week that the fund had raised $40 million in investment, but you also announced that you've already made 14 investments in the space. Why did you delay the announcement for so long, and what are the 14 investments that you've made?
Yeah, so it's actually not pre-launch. So the way it works is in private investments, a lot of times you'll have a first close, and then you'll have a second or third or final close. So we had our first close on on June 29th, and then we started making investments. So from kind of, you know, the end of last year, third and fourth quarter, we made 14 investments. And then we had our final close in the first quarter on February 8th. The reason you do that a lot of times is people will have capacity for a vintage year. So some people wanted to move that vintage year to 19 instead of 18. So, you know, we were just open for about 8 months or 7 months to take capital commitments. So we've invested in a number of deals. We've invested in Coinbase. We've invested in Bakkt. Invested in a couple of protocols. We've invested in a couple of exchanges. And it's very exciting because you see the types of things that people are getting excited about. And we've been able to participate in a number of those. So very exciting stuff.
Next up, we'll be looking at the real action on the crypto markets. It's not happening where you think. So stay tuned.
Christian, buddy, come sit over here. Now, the advertising offers have been flooding in. Look at the pile of offers I've got here for you. Look, let's just take a pic. Picture this. You're hiking through the Rocky Mountains, okay? And you're carrying gorgeous rosewood designer door on your back. And you look into the camera, and then you say, oh. No, yeah, you're right. It's terrible idea. For the next one, you'll be carrying a refrigerator on your back, environmentally friendly refrigerator, and then your line is, well, actually, it's just one word. We'll put that one on ice, okay? Yeah. This is a hot dog chain. You're carrying this huge hot dog on your...
Enough! I've had it. No more carrying, no more saying that word ever again. I'm a serious actor. I have depth. Why can't you get me something with like an office with a tie, for example?
Action! Bitcoin is crashing. We have to sell
Bitcoin is a bubble!
Hodl. 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 I have to find a new agent.
Despite all the hype and excitement for the world of securities tokens, an article was published this week titled "The Real STO Market Near Death." The article was published by Andy Singleton, and he's the founder of Above Board Securities. Andy, you published an article this week which presented a rather sobering view on securities tokens. It's called "The Real STO Market Outlook Near Death." And I'm going to read the first paragraph to our viewers for those who haven't read it. It reads, "The market for tokenized securities is lifeless. Nobody's buying these securities. A squad of zombie startups staggers on, announcing infrastructure and posting deals for sale, hiding the dismal truth behind happy faces. But nobody's buying." Andy, is this really your view of the current STO market?
Yes, that's what's happening right now. It doesn't tell us that we're not going to succeed in the future, but it's important to note that the information around the security token market is in many ways wrong, and it's causing us to focus on the wrong problems to solve. Most of the information about the securities token market is coming from the sell side, from people who are selling either infrastructure or that are attempting to sell deals. And it's a one-sided conversation because there's actually no buy side. I estimate that less than 1,000 people in the entire world have ever purchased security tokens. So it's important to recognize that the customer is always right, and that's our market, and the customer is not buying. And it's actually not really a self-correcting situation, because if you have a market where all of the input is coming from the sell side, that market is going to continue to design deals that are bad deals, that look great to the people that are selling them, but don't sell until the buyers engage and actually start telling us what they want and buying these securities through a process of negotiation. The problem is not going to get solved.
So Andy, assuming that I see your point, how do we solve these problems?
Well, there's really three layers to it. The first is figuring out what is the value of tokenized securities. What are they going to bring to the market that we don't have with the paper format and in DTC, centralized depository format securities? And we have a lot of theories about this, but so far investors haven't responded and said, really, that's a lot of value. Some of the theories are that it's just a more efficient way to document the securities. Some of the theories are that it's global distribution. I tend to think that that's a very important layer of value. So a lot of people are focusing on liquidity, which I think I'll get to later in this call, but I think that that's a less important feature. And some people are focusing on new features, the fact that you can have things like real-time royalties and voting and new crypto features in these securities, which I think is actually going to be very important for the market. But one way to solve this problem is to focus on features. Another way to solve this problem is to focus on infrastructure. And that's what most of the market is doing. The people that you talk to are all selling infrastructure. And in fact, selling it unsuccessfully. So you had an interview, for instance, with the founder of Polymath. They've, as far as I know, never successfully sold a securities deal. Harbor has made a lot of noise in the market. They have never successfully sold a securities deal. So there's a problem, and a lot of people are saying the problem is because that the infrastructure isn't good enough. I'm actually not buying that analysis because the infrastructure for Bitcoin was terrible, and yet people made a lot of money, possibly because the infrastructure was bad, trading Bitcoin in parking lots with thumb drives. People who started trading Bitcoin over the last year with beautiful wallets and exchanges and infrastructure actually have lost money. So from an investment point of view, infrastructure follows the market, and investors will go and seek out good investments. The third way to think about this is we need better investments. In my article focused on the fact that most of the offers the tokenized security offers that people have been making are just bad investments on the face of it. They're investments that people couldn't sell, startup entrepreneurs couldn't sell in other markets. So the three ways to look at it: what's the value add in the features? That's a very important thing to focus on. How do we get better investments and what makes these investments better? That's an important thing to focus on. Where the noise in the market is we're selling infrastructure. I don't think that that's important, and it's obviously not succeeding in bringing the buyers.
But Andy, surely we need the infrastructure to get the revolution on the way. Surely you can't accept that the traditional financial system will transform without any infrastructure. And if you look at the players today, you look at Polymath, you look at T0, you look at Harbor, you look at Open Finance, what they're doing is they're building the building blocks. Is this not the first step and everything else will follow?
I actually don't think so. From an entrepreneurial point of view, it's much better to start with demand, as the people who traded cryptocurrencies did, and then build infrastructure around that demand. The crypto securities market is developing in a completely different way, where people are investing in infrastructure first. But as you've probably noticed, all of those players have missed a lot of deadlines. T0 said they would be selling out their offer last December and be trading by May, and it took them almost a year to sell out their offer, and they really only announced trading last week. And interestingly enough, their whole system is designed for brokers, right? It goes back to 100 years to when you had to call your broker to do a trade, and the only broker they could sign up is one nobody's ever heard of, Dinosaur. So why is that? Why is it that Harbor has never successfully sold a deal? Why is it that Polymath has never successfully sold a deal? The reason is because there's no demand. We at Above Board have had a complete similar system, which allows you to issue an Ethereum token, track the investors to make sure they're qualified, and make sure that the trading rules in all the different jurisdictions around the world are followed, and track those investors in a registry. These are the same kinds of systems that Polymath has been building, that Harbor recently pivoted to. So we've had that available since June, and what we found was we couldn't launch it because there was no demand. When we went to the holders of private company equity and we asked them if they wanted to issue their stock in this format, which would in theory give them global distribution and some access to exchange, they surveyed their major investors, and their major investors said, no, we do not want this format. And it's actually become a negative, which is holding back all these other projects. The technology is there. Open Finance is trading. The technology of enforcing securities laws in the programmable token has been out for at least 6 months, but you don't see Open Finance picking up more of these issues and trading them because the issues aren't very good and nobody wants to trade them. So what people don't know is that vendors have been out trying to sell these systems unsuccessfully for at least 6 months.
So Andy, if I get it right, it sounds like you are bullish, but you say we need a good deal or a whole lot of new deals if we're going to get traction in this industry. Is that right?
Obviously, if you have a hot offer, then that's going to make it a lot easier to sell these deals, which is what's not happening. But in order to attract those issuers, now you're back to the infrastructure. You actually do have to give them something, probably not something better than what they have now. It's probably not infrastructure, but it's probably features. It's probably a new way of interacting with their shareholders that uses some of these crypto features, like, for example, staking, where you can essentially buy a membership, like a New York Stock Exchange membership used to be sold, that will entitle you to the use of the product. It may be a real-time royalty. So we're going to have to figure out what the deal is that motivates both issuers and buyers.
If you thought crypto was dying and that volumes were going down, think again. When you look at CoinMarketCap and you see a market cap of only $130 billion, and you see about $15 billion changing hands every single day, you may be right in thinking that the crypto market is dying a slow death. But the truth is that there seems to be new life in the market, only that it's not happening on traditional exchanges. It's happening in the crypto derivatives market. And today, the Block Crypto is releasing a report that explores this new and exciting market. I've got Frank Chaparro on the line all the way from New York City. Frank, The crypto derivatives market, why is it so important?
Well, I think it's important. Well, before we get into why it's important, I think it's important to take a look at how we've gotten here, right? And when I think about the cryptocurrency market, obviously we're in a very bearish environment outside of some of the price movement yesterday. There's obviously less interest in the space. Volumes are down, less trading's happening, and that's bad news for exchanges, right? And exchanges are at the heart of this ecosystem, right? They employ probably the most people. They probably make the most money. I mean, in 2018, right, they're bringing in revenues close to $3 million a day, according to Bloomberg reporting. So now, with that in mind, the fact that the market has sort of taken a bit of a nosedive, derivatives are important because they provide a sort of almost a safety blanket, if you will, for exchanges looking to squeeze as much out of this market as they can, right? At the end of the day, they make money by people trading things, and when you have a market that shrinks as it has, you need alternatives, and so that's sort of what we're looking at moving into 2019. If the bear market persists, right, you could see exchanges weigh their options, and as the report will indicate, or as it indicates, BINANCE, for instance, is one firm that's looking to crack into offering futures, right? And it's a market that is dominated by the likes of BitMEXC, right, which offers its perpetual future contract, trades, almost $1 billion of Bitcoin a day, and, is one of the most profitable firms in the space.
So Frank, today as we stand, what's bigger? The underlying market trading at $130 billion and $15 billion a day, or the derivatives market?
That's a really good question. I mean, it's not 100% clear, right? Because so much of the volume in even spot occurs over the counter or through market making firms and over the counter trading desks. It could very well be bigger, and the report indicates that as well. And that's the interesting part, right? We could very well, moving into 2019, depending on how much the underlying grows, if we sort of stay at 130 billion market cap, we very well could have a derivatives market that is double the size, 200 billion. And that's being driven not just from exchanges, to be clear, looking for new opportunities, but traders are looking for, especially traders who might not be comfortable with the underlying market and want something that can give them exposure. Products such as swaps, futures, options, give them that opportunity. And also you have the fact that people already in this market, trading firms and the like, investors, even miners, they need vehicles by which they can hedge their positions. And so that's why a lot of these products are becoming more popular, because it just offers new complex ways to trade, to hedge, and to participate in this market.
Frank, I know the report is probably very comprehensive, but if we were to take three nuggets or three takeaways from this report, what would we find?
Yeah, so I think the biggest, the scoops out of this thing, if you will, would be definitely the fact that Deribit is set to launch a Ether option, which is interesting for a couple of reasons. Binance is looking into futures, and just the sentiment of, the fact that this derivatives market could be double the size of the underlying. I think those are the three main interesting takeaways, or the quick takes, if you will, in the report. But what's fascinating to me is it really tells a bigger story, not the report, but the sentiment of it, which is this market hasn't been so black and white. Rand, I know you've been doing this, since 2017, doing your show. Throughout the end of 2017, 2018, there was this narrative that institutions were going to come in, that this market was on a straight trajectory to institutionalize. And, then we kind of got into the bear market, and it seemed like that wasn't necessarily happening. And, I reported that Coinbase was sort of pivoting away from Wall Street. Blockchain in the UK was pivoting away from luring those larger investors from their respective platforms. But in 2019, I think it's not as black and white. It's not that institutions aren't coming. It's not that they necessarily are at a breakneck clip. Coinbase and some other crypto native firms are sticking to their crypto native roots. Investment banks like Goldman, there was tons of rumors and speculation and reports about when they would enter this market. They're kind of still a long ways out, but at the same time, right? So that doesn't mean that this market isn't institutionalizing. At the same time, right? You have this derivatives market growing, booming. You have further partnerships, further announcements of new products to help investors and traders position themselves in this market. So it's not so black and white, and I think that's one of the main takeaways of honestly my reporting over the past couple months.
Frank, if our viewers want to get a copy of this report, where can they go?
You go to theblockcrypto.com.
Craig Wright is at it again, and this time he's made a submission to the CFTC that he's willing to testify under oath that he created Bitcoin under the pseudonym of Satoshi Nakamoto. Tonight I've got Craig Wright live from London. Craig, I'm looking at the submission that you made to the CFTC where you claim that you're willing to testify under oath that you created Bitcoin under the pseudonym of Satoshi Nakamoto. What is this submission actually about?
Basically, the submission is the Commission wanting information about how blockchains work. In particular, it's really focused on Ethereum, but it also goes into a little bit of detail about other blockchains.
And Craig, why did you feel as part of the submission that you needed to add in the part where you created Bitcoin under the pseudonym of Satoshi Nakamoto?
Because if I'm going to go in there and give them truth, I'm giving them truth. So,
Craig, as far as I understand, the CFTC don't really take testimony under oath. They're not a court. They don't really take testimony under oath.
That's actually incorrect, and every submission is considered under oath. So just by putting that is actually under oath. Do we want to move on from this, or do I end it now?
Okay, hold on. Do you not want to talk about the submission?
Do you want to talk about the submission, or do you want to talk about that one little bit? I've already discussed this. You say it once more, it's over. Okay? That's it. I don't give a shit about your thing. I don't care about being on media, okay? You mentioned that one more time, I just click end. The end.
Okay, then let's talk specifically around the submission. What are the contents of the submission?
So basically it's describing what blockchains are and how they work. Now, this is an area that a lot of people want to try and confuse people with, because the whole ICO world is really a scam world. It's bringing back the Usenets and penny stock scams that were there in the 80s and 90s in a new format. Now, this is all these things are doing. New coins, new ICOs are pure scams. Not one of them has ever created anything. They are purely a way of getting around the controls that stop people from scamming others, enabling people to take money, do nothing, and not return a cent. That's all these are, and they have to end.
Okay, so on that point, I'm going to challenge you specifically around an Ethereum type token. These tokens are specifically tokens that are used for transactions to power some kind of supercomputing mechanism. Are you saying that these are frauds?
There is no such thing as a token for a supercomputing mechanism. That's a scam and a lie. There isn't one. There is not one token that gives you a single compute cycle for less than 1 million times the cost of something now. You would actually be more efficient to buy a Raspberry Pi than you would be to buy $1,000 worth of compute cycle on Ethereum.
Craig, are you saying that as the self-proclaimed creator of the blockchain, that the only use for the blockchain is for the transfer of value, like we use it with Bitcoin or Bitcoin SV?
Yes, there can only be one blockchain. This is the whole nature of it. If you have various competing systems, the power is competing for the same thing. So either one survives or all collapse. There is no middle ground here. It's a protocol. So you either have one or nothing. Now, the value exchange that we're talking about is really selling compute cycles and settling things. The blockchain is effectively an engine that satisfies what the BIS does, what some of the clearing houses do. It doesn't replace banks. It doesn't do any of this decentralized crap. Because quite frankly, decentralized, well, what does that mean? It's thrown out there as this nebulous word that is a circular argument. It's decentralized. Why? Because lots of people use it. What's that mean? It's decentralized. That is idiocracy squared. Now, what you're really talking about is we have competing groups and companies. And these competing companies actually act as a distributed clearinghouse. And Bitcoin then solves the double spending problem. It's not more anonymous. In fact, after eCash, there were 20 or so different formats of electronic cash that were all way more anonymous than eCash, and eCash was anonymous, far more than Zcash or Monero. So one of the things I've been working on that I'm going to be releasing later this year, first to people like law enforcement and then to others, will be how to kill Zcash, how to kill Monero, etc. If you have a privacy coin, I will show you that it is basically as private as running through Times Square with your pants around your ankles.
Anthony Pompliano, or the Pomp as he's known to most of us, is the founder of Morgan Creek Digital, and he also runs one of the top 10 investment podcasts around the world. In fact, all day today I've been trying to listen to his podcast with CZ, the owner of BINANCE, or the founder of BINANCE. Anthony is also joining us in a weekly feature on Crypto Trader called The Wrap with Pomp. He'll talk us through the biggest stories of the week that he's looking at or keeping on his radar. So Ant, let's kick it off for our first segment of The Wrap with Pomp. What are the stories that you're looking at this week?
Yeah, the one big story is Bitmain. Last year in Q1 and 2 of 2018, they reportedly made $1 billion in revenue, in profits. Now reports are surfacing that through Q3, they only had $500 million in profit. So it looks like they lost about $500 million in Q3 last year. The bear market's really getting to them. And so what I'm interested in seeing is what was that Q4 performance last year as the bear market got worse. It may have actually turned them from being a highly profitable company in 2018 to unprofitable. And then two is how do they get themselves out of this hole? They're going to have to access some capital markets here, whether it's public or private markets. And so I'm looking for them to do something pretty ambitious in the next 90 days in order to kind of solidify the sustainability of the business.
Okay, let's take a look at Bitmain. Here's a company that raised money on an obscene valuation on the back of their very strong Q1 and Q2 results. And then it all crashed in Q3 with these huge losses. Where do investors stand? And do you think we're going to see lawsuits here?
Yeah, I'm not sure kind of where investors stand on this. The one thing to call out is the balance sheet. It looks like they've got about $130 million on the balance sheet. I see some people tweeting on Twitter about that. But they also sold about 500,000 Bitcoin Cash to fund some of the losses from Q3, Q4. If those reports are true, it looks like, again, they have a strong balance sheet. But one that could quickly come under fire if revenues don't pick up here. And so, again, I think the way that most entrepreneurs are going to address the situation, one, they're going to cut down their expenses. Bitmain obviously laid off a high percentage of their staff late last year. And then two is they're going to look to raise capital to get access to those capital markets to kind of solidify sustainability. I'm sure if you're an investor and you invested kind of Q2 in 2018 and the financial performance has gotten much worse, you're probably not happy. But the hope here is that they can kind of ride out the bear market, come out the other side, mining business becomes much more profitable like it was in 2017, and the company will be fine over the long run. In order to do that, entrepreneurs have to figure out how to survive this bear market. And I think Bitmain is exhibit A in terms of somebody who is right at that point where they've got to figure this thing out.
And there's been a lot of smoke around this company. We've even heard reports that Jihan Wu may be leaving as a director or stepping down as a director. As an investor, you run a fund. Would you use this opportunity to buy Bitmain?
Yeah, one, I think you've got to look at the valuation, right? So we don't know where that is, but that would play a key component. The second is that any investor is going to be interested in the dominant player of a part of the industry that's so important, right? Mining in crypto is incredibly key, and Bitmain's the dominant player. And so I think that immediately gets investors that want to learn more. And then 3 is the team, right? The leadership team here has shown a track record of execution that is at a world-class level. And so I think that you're betting on them if you make an investment at this point to kind of ride this bear market out and eventually see better days in the future.
If you're going to be in or around Hong Kong between the 4th and the 8th of March, why not join us at Hong Kong Blockchain Week? This Hong Kong Blockchain Week is powered by NextChange and has over 3,000 attendees, 150 speakers, representing over 100 countries. CNBC Crypto Trader is going to be broadcasting a show live, and so we're giving away 10 tickets to Hong Kong Blockchain Week. If you want a ticket, just tweet me at CryptoManRun. Until next week, I'll be on Twitter at CryptoManRun, and if you're trading, trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.